Good morning, everyone, and thank you for joining us today on Morning Markets. Today I wanted to build a little bit on the story from yesterday in terms of UK inflation, which Raj discussed, and then also just look at some of the movements that we saw yesterday in bond markets. So firstly, looking at inflation, UK inflation for September increased from the 9.9% that we had in August to 10.1%. A large driver of that was a 15% increase in food price inflation over the year. And really that is something that we're all familiar with when we go to the supermarket. We see it both in terms of rising prices, but we can also see it as well as in shrinking package sizes, a way in which companies try and deal with the inflation that they're seeing in their costs, so shrinking package size to accommodate that. I think the other thing is in terms of what does it mean for monetary policy. Certainly it makes it less likely that the Bank of England are in any way able to slow that interest rate increasing trajectory that the market has priced in. We have the meeting on the 3rd of November, and certainly at least a 0.75% increase in interest rates is expected there. I do think it's also important to keep it in context that it's not just a UK specific issue that we're talking about. It's very much global in terms of that inflationary backdrop. That was again evident yesterday when we had euro area inflation numbers coming through, where we saw annual inflation there increasing at 9.9%, up from the 9.1% in August. To put that in context, for the euro area, a year earlier, it was 3.4%. So again, not just UK, but a global issue. I think the other dynamic that we're seeing, and it ties into company results, is that the levels of inflation continues to be significant, and whilst there's maybe some indication that it's starting to peak, we continue to hear from companies discussing the pressures that they face from rising costs, rising wages, making it more likely that they will have to continue to pass some of that cost increase through by way of rising prices. And that was something that Raj was discussing yesterday. I think also really that feeds into a number of other areas of asset markets, in particular the bond market. We've discussed over recent weeks the volatility that we've seen there and continue to see. I just wanted to focus in on the UK from yesterday, where we have continued to see bond yields coming lower, prices rising, as we see some form of stability coming into that market post the Chancellor's new changes to the envisaged mini budget, and that's certainly been supportive. The other factor that was very supportive for those longer dated gilts yesterday, so 20 and 30 year, and the 30 year in particular, was the Bank of England's decision and announcement that the 30-year bond wouldn't be sold as part of their quantitative tightening programme. And that's very important, because if we cast our mind back over just the recent weeks, it has been that 30-year bond that's been at the epicentre of the challenges that the defined benefit pension sector have faced. So that was a real positive yesterday, and indeed we saw the yield there coming back below 4%. It was only a matter of a week to 10 days ago that we were closer to levels of 5% there. I think turning to the US, still having a relationship with inflation, looking at housing data, it's very important as it feeds into US inflation in terms of owner's equivalent rent. We started to see some slowdown in the housing market, particularly as it related to housing starts, which fell 8.1% month on month. An important trend to watch over the coming months there in the US as to how that feeds into inflation numbers, which certainly at the moment from a housing perspective are starting to be impacted by rising interest rates, feeding into increased mortgage costs. I'll leave it there for today, but please do join us again tomorrow. Many thanks. If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.